Okay, so let's look into today's class agenda. So we'll be covering the general ledger accounting life cycle. We'll also be looking into how the journals are captured. Then the components of journal entry. We'll be seeing how we post journals, reverse journals, and we'll be knowing about what data access set is and how we approve journals. And finally, we'll be discussing about what Fusion Accounting Hub is. All right. So let's start with the general ledger accounting cycle. Okay. So Oracle General Ledger provides predefined reports that cover account analysis, journals, trial balance reports, reconciliation reports, and chart of accounts. So what is an accounting life cycle? See, the accounting life cycle is a collective process of identifying, analyzing, and recording the accounting events of a company, right? So it is a standard 8-step process that begins when a transaction occurs and ends with its inclusion in the financial statements. So let's have a look into the 8 steps of accounting cycle, which ensures accurate capturing of the company's accounting transactions. So to start with, you first open the accounting period, then you enter manual journal entries, which can be standard and statistical. Then you import journals from your subledgers. You correct or delete journal entries that fail the import process. And if necessary, you run the import process again. Okay, then you define journals that occur periodically and the allocation of journal formulas for transactions, like your recurring journal entry that we did. Shrikant, you remember the recurring journal entry that we did yesterday in the encumbrance accounting? Right?
Yes,
Yeah, yes. Okay. And the reversal of the journal entries also, we did that, right? Of encumbrance. So you do all that here when you create, you reverse your journal entries and all that, and you finally post the general entries. Okay. Then you review the details of the unposted journal batches. Sometimes, there are unposted journal batches. You've got to edit the unposted journals to change or correct the information. Then you again post those journal batches manually or automatically. You can even reverse the posted journals as needed. Okay. Then you move into your revaluation, where you revalue your foreign currency denominated balances to reflect the conversion rate fluctuations at the end of the accounting period. Now, when I was talking about the chart of accounts, if you remember, I was talking about the currency, and you have your different foreign currency types, like wherein I was talking about the revaluation, the conversion rates, and the translation of the foreign currencies. Yeah, you remember? Shrikant, you remember that, right? You know what revaluation and translation and conversions are, right?
Yes, ma'am. Yes,
okay, good. So then you do your revaluation and translation. Then moving ahead, you consolidate the ledgers by defining and running a consolidation for all the accounts, right? Then you produce financial reports and perform online inquiries to review your current account balances. One second, I think Sneha has joined. I'll just allow her. Yeah, so let's get back. So I was talking about producing financial reports and performing online inquiries to review your account balances. Then you close your accounting period and then open the next accounting period. So basically it's a continuous cycle which keeps happening every month. So this is basically your accounting cycle. So have you understood what accounting cycle is, Shrikant?
Can you please tell what is the journal mean, ma'am? 1 second. Journal. What is journal?
Journal is your record of day-to-day transactions of a business. You've forgotten what journals are. Sir has taken a detailed basic accounting, no, for you?
Yes, ma'am. Yes, ma'am. I didn't recollect it, ma'am.
So no, it's okay. That's okay. Not a problem. So basically, you record all your day-to-day transactions, whichever you happen in your journal entries, right? So those transactions are called as the journal entries. Okay.
Okay, ma'am.
Like yesterday, you remember in the encumbrance accounting? Yeah. Yes, sir. Please continue, sir.
You continue.
No, you wanted to tell something, no, sir? It's okay, sir.
Yeah. Srikanth, see last week I think, last or 2 weeks back I have taken yeah, one entry, about journal for salary payment and all. In chart of while doing the value set and all, while creating all, while I told you no salary and cash and all. See, for
Yes,
paying
sir.
journal entry we pay, journal entry we pass, no, that transaction, if you are
Okay,
paying
okay.
salary to a employee, what will be the entry will be like that, salary accounted or
Yes, sir, yes, sir.
cash. That is journal. Okay, you are
Okay,
recording the
sir.
transaction. Okay ma'am, you can
Basically, all your debits and credits have to be equal.
continue.
Yesterday, when we were mentioning about the encumbrance accounting, you
Correct.
remember the accrual liability, the supply you're paying, when you're paying your invoice payment, we made all those journal entries, right? So you basically keep an account of whatever transactions happen in the business, right? So you have to record all that. So you record all those information or whatever transactions that are happening on a day-to-day business. You record all those through the journal entries in the books of accounts, okay, which is called as the ledgers.
Okay,
Okay,
ma'am.
okay, got it. Okay, fine, good. Okay, so then this is how the cycle every month it happens. Okay, then an important thing that one should keep in mind is that you can post journal entries only in an open accounting period. All right, so during the posting process, the journal entry is validated, and if successful, the credit and debit amounts are updated to their respective account in the ledger. Okay, so and another important thing is that you cannot change a journal entry once it is posted. So a journal entry should be edited as needed before you post them, right? But as humans are, there's a tendency for errors to happen. Suppose if an edit is needed even after the entry is posted, either you can reverse it, okay, or you can enter the journal again with a as a new journal and with the correct amounts in case if there is an error which has happened. Okay, all right, so you're clear with the basic GL accounting cycle, right? So shall we move ahead to the next slide?
Ma'am,
Yes,
Srikanth
sir.
would be knowing that period, no? What is that open period? He knows, no? What is period? He knows that open period means.
Yeah, you
Srikanth,
open, yeah.
Sir,
Srikanth, what is open period? You know, no? What is period in accounting cycle?
opening,
Yeah,
Pardon?
opening. Okay, yeah, please continue, Shrikant. Yeah.
Srikanth,
opening of the account at the beginning. It is called the opening.
no, yeah, I couldn't be able to hear.
Opening of the account at the beginning.
March to February.
Okay. The financial year of March to February.
No, April to March. Financial year is April to March.
Okay, okay, sir. April to
Opening
March.
period. Yeah, opening period, every month we will open the period. See, month close, we will do it in the month end. Again, we will open the period. Like that, we will open the period. Again, we will close it. Again, the next month, the period will get opened. Sometimes the period will be open for the previous month also. Suppose, for example, this is August month. The period will be opened in the August month, and also it will be opened in July also. Okay. So like that, ma'am will be telling that in the subsequent slides and all, he will tell you. Okay, now it's clear?
Sir, yes, sir.
Okay.
See,
Ma'am, you,
basically, like yesterday when I was talking about budgeting, see, you can plan your budgets on a yearly basis or a monthly basis. All your financial reports, like your, balance sheets, your income statement and everything is, based on a financial year. Okay, so at end of every year, all your reports are generated. But in every month, you need to keep a record of what all transactions are happening in your business, right? So that's the reason every month we open a period. Okay, then by the month end we again close the period, and it's a subsequent cycle which happens throughout the year, which continues year on year. Okay, right, Shrikant, you got a basic idea of why we open and close a period every month, right?
Okay, okay.
Okay, fine. Okay, so let's move to the next slide, which is the journal capture. So the ledger and the subledger transactions are captured in 4 ways, okay, which is entering journals manually, entering journals in spreadsheets, then importing journals, then creating journals automatically. So use of these methods varies depending on the application providing the data, or even the reason for the entry, such as your error correction versus monthly entries, or even the tools engine such as the calculation engine used in the automation of journal entries. So let's have a look into each of these ways. So entering journals manually. So here what you do is you enter journals manually. Usually on a basis you enter journals automatically. But sometimes what happens is as I mentioned, once you posted the journal entry, you cannot delete them. So what do? You do corrections of those journal entries, right? So that is usually done manually. So you manually, basically, whatever errors have occurred, you correct those by manually entering, posting those journal entries with the, suppose if there is a wrong amount which has been entered, so you post a new journal entry with the correct amounts. Okay, so this method usually requires a more time, it's more time consuming, and it is again open to errors because as there is a human intervention in it. So then the next is entering journals in spreadsheets. Okay, so if you remember, I had spoken about the FBDI and the ADFDI. Do you remember, Sneha and Shrikant? About those, how you import? Yeah, correct. What is FBDI?
Desktop framework.
Sorry, Shrikant, be a bit louder.
Framework.
What is the full form? You don't remember. Okay, what does it do? What is the function?
File-based data.
Correct.
File-based data.
Correct. What? Data what? Yeah.
You bring in a large volume.
Correct. Good. ADFDI, Sneha? Sneha, are you there? I think she joined the class. So what is ADFDI? Yes, yeah. Okay, what is even if you don't remember the full form of it, what is the functionality of it? What does it do? Why do you use ADFDI or FBDI?
Like it's for application related framework.
Yeah, see, I'm talking about entering journals in spreadsheets. So why am I talking about FBDI and ADFDI here? Can you relate something with that? Okay, fine. Anyways, you do. Okay, fine, no problem. I'll again repeat. See, usually you import journals or whatever information, the financial data through FBDI or ADFDI. Now, what is FBDI? This is a file-based data import. Okay, through your cloud, you import a large amount of data into your system, whereas your ADFDI is internal. Okay, which means application development framework desktop integrator. Okay, so you can even enter journals through the spreadsheets. Okay, and you load the completed spreadsheet into the import interface, right? It's the same process. I think I've explained it to you in detail as to how FBDI and the ADFDI works, right?
Excuse me, ma'am.
Yes, sir.
Excuse me, ma'am. Will you please repeat the same?
Ma'am, about the entering journals in spreadsheets?
No, not like that.
FBDI. Okay,
and
ma'am. See, these are FBDI is file-based data import, whereas this is a tool which is wherein you use this tool to import a large amount of data, okay, into your system. Like the spreadsheets, you use with the help of spreadsheets. You put all your journal entries in a spreadsheet. You do whatever corrections are needed into it, and you directly load them into your system. Okay, which again it's been pushed to your general ledger, ma'am. So there are two tools which you use. One which is FBDI. This is a cloud-based tool wherein you can import a large amount of financial data. ADFDI is your internal tool, ma'am. Okay, so it is basically it's a very slow process. So maybe if you have a little, a lesser amount of data that you need to transfer, you can do that through ADFDI, which is called as Application Development Framework Desktop Integrator. Right, ma'am?
Okay, ma'am.
Okay, fine. So then in this you can schedule or manually submit the journal import process to import the data into the ledger. Okay, so basically working in spreadsheets adds a functionality such as the use of macros and formulas. You have these macros and formulas in your spreadsheets, right, in your Excel and all that. So you can use all those which helps you in updating your journals in a much faster way. Okay, so then you come to importing journals. So here what we do is we use Oracle Fusion Subledger Accounting, all right, to submit your journal entries from Subledger applications to the import interface, like your accounts payables, your accounts receivables. Okay, those are all the subledgers. So you use your subledger applications to import the journal entries through the import interface. Okay, you can also schedule it, or you can manually submit the journal import process to perform the import. Then you can verify that the data is transferred completely and accurately. This method also efficiently and correctly populates the bulk of the data in the general ledger. Okay. Then moving on, the fourth way is creating journals automatically. All right. So in Oracle Fusion General Ledger, you can create journal entries automatically to automate process and reduce both errors and data entry time. For example, you can define allocation rules and rule sets in the Oracle Fusion Calculation Manager. There is a calculation manager in the setup work area, maintenance area. So that sir will walk you through all those components when we are doing our practicals. Okay, so you'll get a better clarity on that. Then in this you can define the journal reversal criteria sets also, like for specific journal categories, to automatically create reversal journal entries. Now if you remember in yesterday's classes, we were talking about offsetting the encumbrance commitment stage. You remember Sneha and Shrikant? How we were
Yes, ma'am.
reversing, we had to offset those encumbrance journal entries, right? Otherwise, if we don't
Reverse
offset,
them.
correct. So we had to reverse those entries. If we don't do that, our trial balance debits and credits will be like, not matching.
They will
Okay.
not match this.
Correct. So you can all do that in your when you are creating journals automatically. You can actually set a rule for that. Okay, for the reversal as well. Then you can even define your revaluation properly. Okay, wherein when the revaluation or the conversion of currencies happen, there are a lot of gains and losses which happens. Okay, because of currency exchange fluctuations. Okay, so you even can set that in the automatic journal creation of journal entries. Okay, so the process basically adjusts the respective foreign currency denominated asset or liability to its current account value. Okay, so everything goes and gets offset into your unrealized gains or loss account. Okay, so this is what it is. So everyone is clear with the 4 ways of journal capture?
Yes, ma'am.
Okay, so ma'am, you're okay, ma'am, with it? Chitra
Yeah,
ma'am?
yeah, yeah, sir. Yeah, ma'am, yeah, ma'am.
Okay, ma'am. Okay, fine. So let's move ahead to the next slide, which is the journal entry components. Okay. Now, without journal entries, your ledger isn't going to work at all, right? So journal entries are those handy tools that post accounting balances to the ledger for reporting and analysis. So a journal entry is the record of your financial transaction, okay, in a journal. So a journal details all your financial transactions of a business and accounts and which accounts these transactions, which affects your financial statements. Okay, so what these are the three journal entry components, which is the batch, journals, and your lines. Okay, so what is a batch basically? A batch is a collection of journals. Okay, you can organize journal entries with common attributes into batches. Like for example, you might group your journal entries by type or date. Okay, so you can have multiple journals in one batch. Okay, like your salary, all salary account can, all salary entries will be one batch. Okay, like that. Or you can even have a separate batch for each journal entry depending on your type or date. So a batch can contain multiple journals each of which can belong to a different ledger. Okay, so but all of the ledgers within a batch must have the same calendar, your period type, and chart of accounts. This is a prerequisite for a batch. It should always have a same calendar, period type, and chart of accounts. So all journal entries in a batch must share the same period. You can create a journal batch for any open or future enterable accounting period also, but you can only post batches in open accounting periods. As I mentioned, you can only post all your journal entries in an open accounting period. You cannot post a journal entry in your closed accounting period. Okay, so this is one important aspect that you need to keep in mind. So then even if you don't want to enter batch information, okay, in the system, you can enter a journal directly. The general ledger will create a batch for the entry automatically, okay, using the source manual combined with a unique batch ID. And then is the next component is your journal, which requires, basically these are your normal journals wherein you require a name for it, an accounting date, a category like your different accounts like your salary account or your sales account or whatever, and the currency which is required, whether it's your functional currency. Now, currency is basically your currency that your country's currency in which you're doing your day-to-day transactions, and your ledger. Okay, so these are the basic requirements for the journals. And the third component is the line. So the line requires accounts and amounts. If you remember, in the sir actually posted one. Sir, you have shown the journal entry posting, no sir?
Yeah.
Okay.
Ma'am, see, one second, ma'am.
Yes, sir.
Can I
Yes, sir,
add on something?
please, sir.
Sneha Srikanth,
Yes, sir.
you know, first class of accounting class, I have given one example, no, that is for recording a transaction, what are all the requirements we need?
Calendar, date, calendar.
See, in journals it is there, no? Date, currency, ledger, category, and all. That's I have told you, no, that is journal. Okay, that's the requirement is there. Okay,
Yes, sir.
Okay, sir.
and lines, debit, credit.
Yes, sir. The account and it should be debited or credited.
Yeah, one is debited and it's credited with amount, and it should tally. Okay, debit and credit amount should tally. That is in the first class I have told now. You
I
remember?
think, sir, even in the instance you have posted a journal entry and shown to them, right?
Yeah. Afternoon batch only I have done.
Okay, you've not done it. Okay. Anyway, sir will show you how the journal entry will be posted, and there you can actually see the line, okay, wherein sir just mentioned a debit line and a credit line, right? And both should match, right? So basically those are your lines. All right. So anyways, tomorrow's class, sir will be showing you by posting journals, so you'll get a better clarity on that. All right, so let's move to the next slide. You okay? Everyone is
Yes,
fine
ma'am.
with it? Okay, fine. Okay. Then is your posting journals. The journal posting is a process that updates balances in your general ledger accounts to reflect an entity's business transactions, and it provides data for your financial reporting. So there are two aspects to consider in journal posting. One is your functionality and the second is your timing. So what is functionality? See, posting is done from the journal pages by selecting journal entries and clicking the post button. All right. Now you can automate your posting process by scheduling and automating posting process to periodically select and post batches. Okay, you can start posting from the journal creation spreadsheet in Oracle Fusion. As I already mentioned, you can import and through your spreadsheets, like by using ADFDI or FBDI, and you can post your journals through your spreadsheets, and that will be pushed to your GL, the general ledger. Okay, then you can also start posting through the import and post option, wherein it imports the data in spreadsheet and then runs the posting process. Okay, so once you post a journal batch, you can not modify its contents. Okay, you cannot delete posted journals, but you can copy or reverse them. As I just mentioned in the previous slide, you cannot delete an entry. Okay, you can always reverse it, or you can do that by again adding a new journal with whatever correct amounts. Okay, in case if if you've added a wrong amount, you can not delete that, but you can in fact re-enter a new journal entry. You can make a new journal entry with a new the corrected amount. Okay, all right. So that is what it is. Then let's move into the timing. Okay, the journal entries can be posted to a current period or your prior accounting period, okay, or to an open prior fiscal year. But when you post to a prior period, the general ledger automatically updates the beginning balances of all subsequent periods, even if the period is closed. All right. So if you post a journal entry into a prior year, the retained earnings balances is adjusted for the effect on the income and expenses account. Like for example, here if I tell you, like you're paying a salary, okay, to your employees. So at the month end, April 30th, you're going to close your period. But that is a debit entry which happens. Okay, then again, all your salary account will be, you know, carried forward to your next period, which is your May 1st period. Okay, so it automatically gets carried to your next accounting period. So that is what is meant by timing. Okay, so then comes your two methods for posting journal batches, which are again manual and automatic. Okay, so manually from the journals or create journal pages. So from the journal page, what you do is you click the post button during the creation process. Okay, you use this method for manually created journals, and you use the manual posting after an error correction. As I already mentioned, if there are any corrections which needs to be done, you usually do it through your manual entries. Otherwise, in a real-time scenario, people usually opt for your automatic posting, okay, wherein you use your spreadsheets, okay, and or you automatically, you give a criteria set for your revaluation process through your secondary journals or your sub ledgers. Okay, so that automatically uploads into your system and is pushed to your general ledger. So these are the two methods for posting your journal batches or your journal entries. Okay, you fine with it? Anybody has any doubt here?
Sneha, Srikanth.
No, ma'am.
Okay, Chitra ma'am, are you able to follow?
Yeah, ma'am, yeah.
Okay, so you wanted to
Sneha,
add
Srikanth.
something?
Yes, sir.
See, ma'am told no reversal of journal.
Yes, sir.
What is that reversal of journal? What is that reversal of journal means?
Like if we are posting an entry as debit and credit,
You tell
we
me,
need to
one example you tell me.
salary account data to bank in one
Okay.
entry,
Okay.
and to reverse that entry, bank account data to salary account.
Very good. Very good.
We are
That is
changing
called,
the debit entry as credit entry in the next transaction.
yeah. Good, good. And what is that criteria sets? Criteria set. Criteria set. What is that? Automatically using criteria set. I told you set, valuation set, value set. Value set I already told. No, what is that value set? What is that value set I told?
Company
Defining
department.
the rules for the value.
Defining the rules.
Rules for the value. Like that automatically to create journals, we have to define a rule, condition, set of conditions we have to give for automatically creating a journal. That is criteria set. We have to define. Okay, that is called criteria set. Okay, ma'am, you can continue.
Yeah, basically it's, giving condition, giving rules to your system that, okay,
Yeah.
you put, a date, and you'll specify, okay, these are the accounts that needs to be reversed every accounting period after it closes. So it automatically reverses when you open a new period. So basically you're putting rules into the system. Okay, so these are the accounts which needs to be, automatically posted, or these are the accounts which needs to be automatically reversed every accounting period. So that is what is criteria sets. You're defining your rules into your system. Okay, right? It's clear? Okay.
Yes, ma'am.
Okay, it's fine. We shall move to the next.
See,
slide.
sometimes what happens is, I will give you an example. See, sometimes we have to pay rent to, suppose if we are having a building, we have to pay a rent, yes, or some expenses we need to incur that. For that, we need not get the document as such. What they will do is that they will temporarily post a entry, which will get reversed because they want to take out the accurate this thing for the month. They have to derive a income statement. For that, they will post a entry which will get reversed in the next month, which will not happen. Okay, they will reverse it in the next month of the first day. So they will account it as an expense. Then they will reverse it. Okay. Okay, ma'am. You can.
Okay, fine, sir, fine. Let's move to the next. Reverse journal. Okay, so basically, what is reversing journal entries? These are journal entries which are made at the beginning of an accounting period, as sir just mentioned. He gave an example, right? Then these are basically made at the beginning of an accounting period to reverse or cancel out adjusting journal entries made at the previous accounting year. So for example, if the salary expense, as I just mentioned the example of this, if the salary account expense is closed on April 30th, a reversing entry on May 1st creates a credit balance into the account. Okay, so that is basically your reversal of journal entry. So again, your reversal, you have to reverse your journals, you have again two methods, which is your manual and your auto journal reversals. Okay, so manual is again the same way. You can reverse journals manually by selecting a reversal action in the user interface. You can manually reverse the posted journals that are eligible for reversal, say on the manage journals and edit journals page. So both of these pages provide you an action to reverse a journal and an action to reverse a batch as well. So on the edit journal page, you can select reverse from the batch actions menu to reverse a journal batch, or you can select reverse from the journal actions menu, okay, to reverse a specific journal. Okay, so tomorrow anyways, once you see the instance, there are those options mentioned there, so you can get a better clarity on that. Then is your auto reversal journals. Okay, so here as you can see, you reverse journals. Sir, I'm left with 1 minute, sir. What we'll do is we'll start. Okay, so we'll log out and we'll
Yeah,
start
after
with
coming out, you can
yeah,
start.
yes, sir. Yes, sir. Okay, that's better.
Yeah,
Yeah.